And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 index for Sunday, June 13th, 2021. Picking up basically where the market left off, on Friday's update, I had placed a sub-minute wave 2 under this particular low that we saw on Thursday. And it ended in a failure. So that's wave 2, we were looking for that C wave to come down and put in a new low below 4,205.75. And it came down to 7 and then launched. And so it ended in a failure. We put the minor wave 2, and then this we were labeling as the very first wave up within this minute third wave that is in progress. And so the market went up, came down in an A. We thought that was the A, came up in a B, and then started back down. And I was thinking that that was going to be the C wave, and it was complete with a lovely little gap with the change of the contract. But what really is now coming into play here after we've come down in an A, it looks like we got an A, a B, because this is a perfect little 5. And this, so it's A, B, C for maybe, and now we're at the internal B wave. And now we're getting wave C up, which likely might come back up to 4,244, or at least up towards this high. Before we get a C wave back down to put in a new low below 4,218. Now that just doesn't really jive with what I'm seeing, but again, stranger things have happened. And again, I can know 1, 2, 3, 4, 5, I can count 5 up to the Globex opening highs. It doesn't sit necessarily in the same fashion as the NASDAQ right now, but the NASDAQ has gone off on its own. And while the Dow, the Russell, and the S&P may decline, and the NASDAQ continues to go up, the NASDAQ will continue to find support from particular stocks in common between the two indexes. And so we'll see what happens. But right now, I don't necessarily want to count this as a failure. In other words, that was the A, this was the B, and this C ends up being a big old 3, which just doesn't sit right with me, which is why I'm leaving this whole scenario open and letting the market tell us. But what I am going to do is keep in mind that there's the possibility that we get up here and it turns and drops and takes back all of that rally and comes back down and puts that additional low below 4,218 to complete this small inside wave 2, which has ended up being much bigger than we'd have thought, since it took about an hour and a half for the market to get up here. And now it's taking two days in total, or 2 trading sessions, for it to get back down and start an intensive third wave. But we're going to let the market tell us. So for tomorrow, upside should be continuing to find resistance here. If it breaks above 4,251, then we're likely going to be in that third wave. And if that's the case, we're starting to enter into the zone. And that zone for wave 3 would come 4260, 4270 to 4280. That's a lot of ground, and all very possible. Where it truly lines up double is 0.618 and 100% of with this wave up would be equal in length to the wave A. So both are kind of there, and we may have to deal with that. And so, and that's the case, that would be the next level, where I would expect a more intense or a little bit larger pullback to take place. All in here, I would suspect, if indeed this is going to be wave 3, then what I'm thinking is that it should start to break above it. This may provide small pauses along the way, like getting up to 4248 or even 4250, then it pulls back and they should be shallow. So the pullbacks will be shallow, holding these support levels, because on the way up it's resistance, on the way down it's support. So holding those levels before launching to the next. If it starts to break and so it's breaking below all of these, well, then we're kind of going to start falling into line with, okay, we're going to do a C wave down. And then it would be expected to break all of that support coming off and at least get back to 42.18, if not a little bit lower. A little bit lower would be really nice. It would make it very nice and clean and then set the launch. Because then we got a nice A, B, C, wave 2. Well, actually, I take it back. It's got to come down to 42.18. Can't go below. Well, can't go below here. Take it back. I'm getting a little bit 42.07. It can't go any lower than 42.07, but it definitely could go down, making it a little bit below 42.18. Sorry for the confusion. So that's upside, that's downside. Personally, I think the markets are going to continue to go higher. Again, we coming out of an expiration on Friday, not the major monthly expiration, which is quadruple expiration, which is next Friday. It'll be the 19th, or excuse me, the 18th of June is a pretty big expiration of futures and options. And then we're also moving headwind. We're getting into headwinds of the end of the second quarter. So we get a lot of position squaring, we get a lot of position transferring. We're going to move from here to here. Position managers, hedge fund managers, they're the ones that got to do all the work. And so we could get some jarring moves in both directions as all of this comes to a conclusion by the end of June. So we want to be prepared for moving in either up or down. So it'll give you upside. And we can wrap some limitations around it. And also if it starts to break, we know where a level it should go before we see a bigger pullback. If it starts to breaking all of those support levels coming down, then we know that we're more than likely going to be moving right on down through 42.18, but not moving any lower than 42.07. A break below 42.07 would signify that something else is at hand, and we're going to have to take a step back and rethink where we're at. But in the meantime, we will continue to trade what is in front of us. That's the most important message I can bring. If you're trading, just trade what's in front of you. We'll pick it up after. We'll take a look at it. We will look at what's happening and be able to put some definition around it and then put some structure around it. But in the midst of it, we trade what's there, have to. And then we're using our moving averages plus additional Fibonacci extensions and support, retracements that we can be putting in. Once we get highs and lows in place, we can also run Fibonacci so we can get an idea of where we're going next. So again, remember, everything that we do with Elliott, these are building blocks. And I'm on a 15-minute chart, and my top line goes all the way to a maximum monthly chart, which for the S&P goes back to the 80s. So we've got big pictures all the way down to little tiny pictures. And so it is important to try to keep them all in mind, but not when you're in the heat of the moment. When you're in the heat of the moment, you're trading what's right in front of you, what's the market doing, and that's what we're working on. All right, I'm going to leave it there. The next update will be Monday, June 14th.